Hello everyone and welcome back to the channel for another critical market update, where we are going to dive deep into the charts to uncover the truth behind the price action we are seeing today on Thursday, December 4th, 2025. The market is currently at a pivotal point, and the volatility is starting to pick up, which means we need to pay very close attention to the technical levels on both Bitcoin and the USDT dominance chart, because these two assets are telling us a very important story about the future direction of the entire crypto market. We are going to start our analysis by looking at the USDT dominance chart, which is often the most overlooked yet the most significant indicator for understanding where the money is flowing at this specific moment. When we observe it, daily time frame for Tether dominance, we can clearly see that it is testing a major structural level that has acted as a strong pivot point for the past few weeks, and this is crucial because of the inverse correlation between stablecoin dominance and crypto assets. If the USDT dominance breaks down below this current support level, it means that liquidity is leaving stablecoins and flowing directly into Bitcoin and other major altcoins, which would trigger a massive price surge and potentially lead us to new local highs in the coming days. However, if the dominance finds support here and starts to bounce back up with strength, it indicates that traders are moving their capital back into stablecoins due to fear or uncertainty, and that scenario would put heavy downward pressure on Bitcoin price in the short term, so we must watch this specific zone very closely throughout the day to see how the daily candle closes. Now let us shift our full attention to the Bitcoin chart, which is currently battling with a key resistance area that has been rejecting the price for the last few days, and this struggle is effectively defining the trend for the remainder of the month of December. On the 4-hour time frame, we can observe that the relative strength index for our SI is resetting and cooling off, which usually happens right before a major expansion in price volatility, so you need to be prepared for a violent move in either direction. The exponential moving averages are beginning to flatten out and curl, which suggests that the momentum is neutralizing and the market is deciding between a continuation of the bullish trend or a deeper correction to gather more liquidity from lower levels. I am closely watching the volume indicator, which is showing us that the selling pressure is slowly decreasing, and this is generally a positive sign for the bulls because it means the sellers are running out of steam and the order books are thinning out on the ask side. If we see a strong impulse move above the current resistance level accompanied by high buying volume, then we can confidently say that the bulls have regained control, and we can target the next psychological price targets. On the other hand, if Bitcoin fails to reclaim this level and gets rejected again, we might see a retest of the lower support zones, where the golden pocket Fibonacci level sits, and that would be an ideal area for long-term accumulation. We also need to consider the Bollinger Bands on the daily chart, because they are tightening significantly, and historically speaking, whenever we see the bands squeeze this tight, it is followed by an explosive breakout, so you must not be on the wrong side of the trade when that happens. It is also important to mention the MACD indicator, which is currently showing a potential bullish crossover on the lower timeframes, and if this crossover confirms, it will provide the necessary momentum to push the price through the overhead resistance walls. Today is a day to be patient and reactive rather than predictive, because the market can fake out traders on both sides before establishing a true direction. You should manage your risk very carefully by using stop losses and not over-leveraging your positions, because the market can be unforgiving during these high volatility periods, especially near the daily close. Make sure to keep your eyes on the USDT dominance chart as your primary guide and wait for a confirmed breakout or breakdown on the Bitcoin chart before entering any new major trades. We are looking for confluence across multiple time frames and multiple indicators to increase our probability of success in this trading environment. Thank you so much for watching and supporting the channel and sticking around for this deep dive analysis. And I will see you in the next video with more updates as the price action develops further. Hello everyone and welcome back to the channel for another critical update on the crypto markets today. We are going to break down the Bitcoin price action and the Tether dominance chart to understand exactly where the money is flowing in this volatile environment. We are starting with the daily time frame on Bitcoin because the candle closed yesterday gave us a very significant signal regarding the strength of the buyers at these levels. It is crucial to notice that the trading volume has been declining while the price has been consolidating, which usually precedes a massive breakout in either direction. Very soon, looking at the Bollinger Bands on the 4-hour chart, we can see they are squeezing extremely tight, indicating that volatility is about to return to the market in a major way, and you need to be prepared for a sudden move. If we look at the immediate resistance overhead, the bears have stacked significant sell orders that are creating a wall, preventing the price from pushing higher easily. However, if the bulls can manage to reclaim the key psychological level above us, we could trigger a cascade of short liquidations that would fuel a rapid price increase. Now let us shift our attention to the US dominance chart known as US.D because this index is inversely correlated with the entire crypto market cap, specifically Bitcoin. Whenever we see the Tether dominance rising, it means investors are fleeing to stablecoins out of fear and selling their crypto assets, which puts heavy downward pressure on Bitcoin price. Currently, the dominance chart is testing a major multi-year trendline support, and if it bounces from here, we could see a correction in Bitcoin prices across the board. But if the dominance breaks down below this support level, it would signal a risk on environment where capital rotates heavily back into Bitcoin and altcoins, causing a rally. Another important factor to consider today is the relative strength index or RSI, which is currently resetting on the daily time frame, giving the market room to breathe before the next leg up or down. We must also keep an eye on the moving average convergence divergence indicator, as the histogram is showing signs of losing momentum, which is often an early warning sign of a trend reversal. It is also vital to look at the order book depth on major exchanges because we can see a lot of liquidity resting just below the current price, acting as a safety net for potential dips. Whales are known to hunt this liquidity, so do not be surprised if we see a wick down to grab those stop losses before reversal back upwards. We should also discuss the macroeconomic landscape briefly because the dollar currency index has been showing strength recently, and typically when the dollar is strong, assets like Bitcoin struggle to gain momentum, so this correlation must be watched closely alongside the charts. Moving back to the Bitcoin weekly chart, the structure remains bullish as long as we continue to form higher highs and higher lows on the macro scale. So do not let short-term volatility shake you out of your long-term positions unless the market structure breaks. Fundamentally, looking at the Fibonacci retracement levels, we are currently hovering around the golden pocket region, which is technically the most sensitive area for traders, and algorithms often react violently at these specific price points. Furthermore, the on-chain data suggests that long-term holders are accumulating at these prices rather than selling, which indicates a strong belief in the future value of the asset. Despite current market fear exploring the funding rates across major derivatives platforms, we can see that the market is relatively balanced right now, meaning there is no excessive leverage on the long or short side, reducing the chance of a massive liquidation cascade in the immediate short term. Finally, let us talk about the scenario where Bitcoin fails to hold the current support, because if that happens, the next major demand zone is significantly lower and we could see a rapid flush to test the conviction of the bulls before finding a bottom. Keep your eyes on the charts, and remember to manage your risk carefully, because in this market capital preservation is just as important as making profits. So stay disciplined and stick to your trading plan regardless of the noise on social media.